Hi there, Serial Trader here. I want to do an update on gold. I got a fairly recent request to do a video, I think, on GDX. Now I'm just going to look at the gold futures. I'll have a look at GLD and GDX as well. All those charts look very similar, but let's just run through them. Now on gold here, obviously we've had some very severe downside movement here in the last number of days. And I'll just go back to where we are, where I think we are overall here. And going back to August 2020, we had the all-time high at 2089. And from there, we did what I consider currently to be a triple zigzag correction. That's where you got a W, X, Y, X, Z. So very time-consuming, very complex correction, a very difficult move to track or certainly try and trade in real time. But now that we have it, okay, after that big correction, we were looking for something impulsive to the upside to signal that we could actually get something going to more than fully retrace this whole corrective pattern. Well, I think currently that's the way I'm looking at this, and you got to work for it a little bit here. But on the future, certainly you can get 1, 2, 3, 4, and then obviously an extended fifth wave up for what I propose is an initial wave 1 out of our triple zigzag correction. And obviously we've had this very sharp, so far what I would consider to be a wave 2 pullback. And obviously you can no longer consider that to be a corrective pullback if we do actually go and take out these March lows, which is on here on the gold futures chart, that's 1673.3. So that is like the must hold level to overall stay bullish here on gold. But currently we have no reason not to, because it has not been taken out. So let's just throw up some fib retracements, and let me make sure I have the exact low snap there. Yeah, okay, I do. Swing low to swing high. Obviously I'll get rid of most of these levels since we've done a deep retracement here. Okay, let me just get in a little closer here on the daily. Now this is obviously an extended C wave if this is an ABC down for a 2. But I'll just say this: we're right around that 61.8% retracement level. You can see we've held what's called the golden zone, and that's the space between the 618 and the 65% retracement level. I didn't make that up, but it's just something I have adopted and I use. I believe that's originated from Trade Devils, if you've ever seen any of their work. Anyway, not a bad thing to throw up there. Oftentimes you do see some interaction with the 618. And the 618 itself doesn't hold, but it does still stay in what's called the golden zone. Not always, but often enough that it's worth looking at. And then, of course, we have the 786 retracement should we break lower, coming into play at 1725.9. So here's the thing. As far as the depth of this pullback, certainly deep enough to be a wave 2. And in fact, the most common retracement level of a wave 2 is around that 61.8% retracement level. But as far as time elapsed, not that it has to be so proportional in time, but it's certainly a nice to see. Let's just throw some time relationships up here. Okay, so we haven't even elapsed 38.2% of the time that we took to do this initial wave off the bottom there in March. So that has me cautious, thinking that, well, we're not about to just immediately start this, our next impulse wave up to eventual highs. That's possible, but what I'm kind of thinking is also maybe more possible or more probable is we have an initial move down for what will be perhaps a more complex, time-consuming second wave, something like this maybe, right? Where we have a series of kind of 3-wave corrections, and then we form perhaps a double zigzag or something like that, or a flat. We do an almost full retracement, or at least over an 80% retracement of this initial move down, and then we get one more 5-wave sequence to finish off the flat pattern, right? Don't know if this is going to play out this way. This could certainly be the entirety of wave 2. but I am just a little concerned at how little time it consumed compared to wave one. So just throwing some ideas out there. Obviously, there's various ways these corrections play out. There's a lot of varieties of them. So until they look mature, hard to have a clear opinion on what it should be. So far, we'll work with what we have, and so far we have a severe but still 3-wave decline into around the 61.8% retracement level. And just throw up the daily RSI. We are quite oversold here on daily RSI. We're at 27. You can see at prior lows, we got a little lower on daily RSI. We got 25 there. Yeah, that's probably the lowest recent one, 25. So we're right there as far as being oversold. So at the very least, you're probably going to get some decent bounce type action here on gold. Whether it actually trends to new highs just in more or less a straight line, I'm not so sure about that. But this is kind of what I'm seeing on the gold futures chart. Obviously, if I go to GLD, it is essentially the exact same chart, other than a lot of the gaps you see because of all the overnight activity just being represented as a gap up or gap down, depending what happened on the futures. But largely, from a directional standpoint, the same chart and the same idea. We had this initial impulse wave off the March lows to our high there here in June, and working a potential sharp wave 2 correction. And again, could be a more complex wave 2 correction. This could just be the first phase of it. We don't know yet. And obviously GLD is oversold as well on the daily RSI. And similarly, but not quite as oversold as it was back in March and also November. But I won't go through too much more on GLD since it's essentially the same chart as the futures. GDX, gold miners. Again, very similar chart. Basically, considering this to also be a triple zigzag correction off of, same August highs here on GDX. So W, X, Y, X, Z, also ending in March there. Now, a little problem with GDX. It's hard to consider this 5 non-overlapping waves since we do have, if you can see here, 4-1 overlap a little bit right here. But there is a way around that, and that's if you look at it on a close-only basis. You can see that we do not overlap on a daily closing basis. On a daily closing basis, you can certainly get 1, 2, 3, 4, 5 non-overlapping waves out of the bottom to consider that our initial impulse wave up. I don't normally like accepting 4-1 overlap, but when you can make it work on the more important charts, which are GLD and the futures, of course, the most important in my opinion. If you get a little overlap on the miners, but you don't have it on the futures or GLD, I'll very easily overlook that, especially when I can justify it by saying, well, you didn't actually have it on a daily closing basis, which is, good enough on its own, really. But same idea on GDX. I think we have an initial impulse wave out of the bottom. This is our sharp pullback, our sharp, potentially wave 2 to correct our initial wave 1. Again, similar to the futures and GLD. I'm not that confident that this is the entirety of wave 2. Even if most of the price has been corrected, perhaps more time needs to be corrected and a little bit more price. So I don't see anything actionable here per se, other than if you maybe want to try and play for a shorter term bounce, which could be substantial, since things are looking nice and oversold. And let me just quickly check some fib retracements here on GDX, how we're looking there. Yeah, so we're right around that 61.8% retracement level here on GDX as well. So very much, basically the same chart as gold itself. Very, very similar. So yeah, nothing immediately actionable to me, again, other than trying to play for maybe an oversold bounce. I would like to see a little bit more complexity or just pattern development before I really embrace that, oh, okay, well, we're just going to immediately form a bottom here and just basically do a nice impulse wave up to substantial new levels. I don't think we're just going to do that quite that easily. I could be wrong, of course, but that's my current assessment here on gold and the miners. So I would just, personally, I'm just going to wait and see. And, for instance, let me go on, say, I don't know, a 30-minute time frame. I mean, you don't want to just go in here and try and catch the falling knife, because there's no signs of a reversal yet here. But if say on the 30-minute time frame or something, say we get something like a little 5-way move up. Let me just get rid of that. And we get something like that, little 3-way move down, little ABC down to a higher low. Then maybe you can try and do an entry and put your stop against that that prior low. Once you have some sort of pattern set up here, at least on a short time frame. Right now, it's just, I mean, it's been in free fall, so I'd want to see some stabilization before I actually try to do anything as far as a position. But just my my 2 cents there on gold and the miners. All right, Serial Trader signing off.